Hey, we're going to cover a few more concepts coming out of Chapter 4. And the next one is the chart of accounts. And what we have here is a whole list of different accounts that you're going to see in the first few chapters of accounting. All right? So each one of these has a numerical designation, like this up here, and then a label. So 101 is always cash. Okay? In all accounting practices, the number 101 means cash. And then after that, you will have major designations of numbers for different things. So these are all the assets in this first grouping right here. So if we take a look, we're going to see, 105, that's accounts receivable. We could have another accounts receivable. We might have money coming in from one company and money coming in from a different company. And we would actually set up different accounts receivables for those different companies. Okay? So this one's 105 and this one's 110. They both act the same way in our ledger system, but this is how it's going to work. You've got other assets like computer equipment, so you'd label them 115, and office equipment 120. And these are all of our assets. So anything in the 100s is known as an asset. Now, why do they have these numbers? Because on a computer system, you would just type in 101. Okay? And in fact, most accountants, if they're working in a business, will actually memorize the numbers and they won't actually type in all these words. So because we're at the beginning and this is really an introduction class, we're going to do this pencil and paper, make it go slower, and you're going to be able to see how things work and why the computer will move things the way it does. All right? So if you just have this type of system and you type in 101, it will automatically print out cash on the side and you type in your entry, $2,000. All right? So you'd hit 101 for account, $2,000, you'd tab over to and who's it going to come to, and then it just goes super fast. So instead of typing accounts receivable from Maria Gonzalez or something like that, accounts receivable from Bob Smith, what you're going to do is just type in those numbers. And so these numbers are the designations for the computer, and you're going to see those come up over and over as we go through the class. Now, anything in the 200 category is a liability. Okay? So the liabilities are all numbered with 200s, and you never use the round number like 200. You always start with 201. So you notice 301, 401, 501, those kind of things, okay? We don't use the round number because it's always the next one up. We start with 201. That is liabilities. Now, how many liabilities could we have? I just, for board space, wrote 1, but you could have 15, you could have 20, you can have 100. How many debts do you have to pay? Those are your things that you are liable for. You can have a whole kind of number of them, all right? Capital accounts are the 300s, and this is owner's equity. So within that, we have a capital account, but we also have a withdrawal account. We're going to get to this in chapters 5 and 6 and 7, okay? But when an owner takes money out of the business, that's actually a separate account. We're going to start seeing that. The whole point to a business is to make revenue, and so this should be one of your biggest things that you have is money coming in. So whereas all these accounts exist, we've worked with them in the first chapter just so that we can get a feel for things, but you really don't use them very much. I mean, you're not buying computer equipment, 10 different kinds every day. You buy it once at the beginning and maybe here and there as you go. But what you really do is you sell stuff. And hopefully you sell a lot of stuff. And so that's your revenue account. Now, if you sell multiple products, you have multiple revenue accounts. So 401, 402, 403, 404. You can just have an endless list of products that you're servicing there. The second thing that most businesses have is expenses. They have to spend money. Salaries, purchasing products, shipping costs, lighting, rent, power, sewer, advertising, all those kind of things crop up all the time. So we actually segregate these accounts and we pull them out. Like revenue is sort of an asset account, but we pull it out. And expenses are like a liability, and we pull that out. So we're going to see those later in some other chapters. Now, you could also call this a ledger. Okay? So a ledger is just an accounting term for all the accounts that we have. So this is the chart of accounts by ledger. So this is the assets ledger. This is the liabilities ledger. This is the owner's equity. This is revenue. And so each one of these is its own ledger. So you'd actually have a whole segment of the computer that would say assets. And under that, you'd have each of these accounts. And that would be the ledger for assets and then the chart of accounts within it. So that's why you need to learn these terms before we work on computers or anything like that. Really, this class is just an intro to that. But when you get to a computer system, you need to understand what a ledger is. So you go looking for the cash account and you'd be like, where is that filed under? It's filed under assets and it's by ledger. Okay? There you go.